You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. Once again, it is Friday, it is noon Central, it is 1 p.m. Eastern. Time to talk some vol. Are you ready? Should be a good one. And of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are binging. Reminder at the top of the show, if you're not subscribed to the full network, you are missing out. Over a dozen other shows coming at you. And then, of course, if you want to join us for the official after party of Volatility Views, known around the globe as Options Oddities, you want to get your name in the hat. About a week left to get your name in the hat for the October Pro Trading Crate exclusives, early access, live streams, all sorts of fun. Even fantasy football. You could beat up on two of the participants on the show this week. Even though we're doing pretty good, we are tied for first. Yes, check it out. Theoptionsinsider.com/pro is the place to go as we go around the horn. First, to not the hallowed halls of IU, but out to the hinterlands of Chicago, where we are joined once again by Mr. Dr. Vix, a.k.a. Russell Rhoads. Mr. Rhoads not playing the old fantasy football, so you can't beat up on him this year. A wise choice by him. Mr. Rhoads, how are things going, sir?
It's Doctor.
Oh, yes.
I'm just messing with you.
I did create a monster.
You know I could care less.
I've been calling you Dr. Vic since way before
I know, you've been calling before I got it. Now that I got it, you know.
I created the monster. So that is my own fault for
yeah, I'm gonna tell you, if I become first dude by some random happenstance, I'll use Mr.
First dude, I didn't realize your wife was running for office. So there we go. A lot unpacking in the Rhoads household. Yeah. Swapping houses, buying new houses, becoming first dude. A lot going on over there in Rhoads land. As we are also joined, I do believe, maybe in the hinterlands of Chi-Town, maybe a little bit closer to downtown, by our old buddy, Mr. Scott Nations, holding court over there at Nations Indexes. Also, the proprietor of an interesting data service many of you maybe have already checked out. If not, maybe you should. Mr. Scott, welcome back to Volatility Views, sir. How go things on the fantasy football gridiron?
I'm actually in first place. I know you and I are tied record-wise, but point differential, I stand alone.
Point differential.
Have to say, by the end of the season, I will consider myself lucky if I'm in the top half.
Yeah, it has been a rough season. A lot of injuries, a lot of buys. I was clear number one last week, and then I lost to the worst team in the league because so many buys and injuries just took my team out of contention last week. Seems like my guys are back, including good old Josh Allen is back. So I should be able to claim a victory. We'll see this week. Nothing is certain in the fantasy landscape this year. It's kind of wild. It's the most injuries and buys kind of impacting combo I've seen early in the season in quite some time. So interesting stuff. So yes, Scott and I locked neck and neck. Who will take the clear, undisputed first place title? We will find out as we now go to the land of Austin, a man who's also not playing fantasy football because he too doesn't want to lose to all of our pro members who are pretty savvy. Mr. Meatball, sir, a.k.a. Mark Sebastian from OptionPit.com. How are things in your neck of the woods, sir?
I'm in enough fantasy football leagues as it stands right now. Pretty good. Market's having a day.
Yeah, it's an interesting one.
It is. And near-dated options continue to be too cheap.
All right.
Just saying.
Sounds like we have a theme as we head on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol trading and trending and analysis and all sorts of fun perspectives. And it's been an interesting week, kind of a grinding higher week, and certainly a not even grinding, just falling out of bed lower on the vol side for most of the week. And that trend continuing today. It seems wild that just a week ago on the show, we were playing the logins. We had hit a 25 handle the day before. Just absolutely wild stuff. Kenny, unfortunately, nowhere to be found on the show this week. He is back locked in the green room, munching away on some stale Ritz crackers because no danger zone in sight this week. The market's back in rally ho mode. I mean, shut down? What shut down? We're like 2.5 weeks in now. Nobody seems to care. Also, heating up, shall we say, on the Canadian trade tensions. But none of that matters when we got CPI numbers coming in that are looking not as hot as expected. Always kind of questionable when we have CPI numbers coming in from the shadow team that was kind of handpicked by the president to give him the numbers that he wants. So maybe something dubious there. We shall see in the revisions down the road. But nonetheless, the market not pausing for breath today. They're eating it all up with a spoon. S&P up about 1%, Dow up about 1.1%, NASDAQ up about 1.3%. We are at 6,800 territory, new all-time highs. If Uncle Mike was on the show for us today, wherever he is right now, he is shouting from the rafters that never before in the history of the stock market has there been a better time to sell than today. And our old pal VIX Cash, I mean, just it seems wild we were even in a 20 handle this time a week ago, let alone threatening 25. 16 3/4. They took vol to the woodshed and executed it old Yeller style. Again, 16 3/4, down 6.5 points from where we were this time last week. Our old pal Volley, so the Just the Facts Ma'am edition, straight at the money vol, was at a 13.35. It's down to about a 13.10 now from where it was this time last week. It puts it down 5.25 points from where it was this time last week. I'm sure Scott will have more to add on that. And then good old VVIX at about a 97, down whopping 31 points from where it was this time last week. So, wow, a lot to unpack on the show this week. Scott, as our guest, we will start with you, sir. It seems wild that we were kissing a 25 handle this time a week ago, just given the aggressive shellacking we've seen in vol ever since, sir. What's been catching your eye?
Yeah, you're absolutely right. It was striking, say this time last week or middle of last week, that volatility was higher, that it was climbing as the market was making brand new highs. You don't see that very often. And so it would have been easy to look at that as a warning sign. And now that we've gotten past, a few catalysts and we've gotten past CPI today, you're right. They're taking you out to the woodshed. Nobody is afraid of anything. Let's sell it. We've talked before about the fact that traders love to sell spikes in vol. We saw that in August. We saw it a couple of times last year. I'm not even certain you can call what happened earlier in the month a spike in vol. Nonetheless, they're selling the bejesus out of it. It's worked, and it will work until it doesn't work. And my fear is that next time it doesn't work, it's going to be really ugly for some vol sellers.
Yeah, that's what we were debating last time on the show. We've argued so many times, you have to be so quick on the trigger finger. Any one of these vol pops we get, you have to monetize aggressively. They last hours, if not minutes sometimes. But you're right, there's always that lingering question. What if you get the 0.01% spike that tends to exceed beyond that and last for days, if not weeks, if not months out there, in which case you want to keep your powder dry. And we were debating whether this was that last week or not. And of course, we kind of came down on the side that you should at least aggressively monetize a good chunk of it. Maybe keep a little powder dry just in case over the weekend, but for the most part, aggressively monetize it. And that does, once again, listeners, seem to have been the proper course of action. We go out now to the hinterlands of Chi-Town. Mr. Rhoads, sir, another wild week on the vol front. The market mostly grinding up until today when it's kind of roaring up, and vol just pretty much executed since our last show. Sir, what caught your eye?
Crush, man. It's just, and it's funny that we continue to follow this funny pattern where we do midweek. We always seem to get some sort of a move to the upside. It hasn't been going above 20 until this week, but it's like we have it's like we have little microbursts. How's that? We're what is it? Microdosing. We're microdosing volatility just for a few minutes every week, and it seems to be in the middle of the week, and then we come back down. And everybody's. I think a lot of traders are conditioned to. I see VIX. I went to lunch. I came back. Saw VIX above 20. It'll come back down before those guys are talking about it midday on Friday. So it just seems that we continue to follow that pattern. I know we're not at options yet, but there also seems to it just feels like more people are positioned to try and catch the spike than take advantage of the spikes for being short volatility. So even though they're short-lived, I don't feel like the market participants are so confident that they're automatically fading every one of these spikes that we get, even though they come in very quickly. But it doesn't feel like people are being nimble and fading them or taking profits on them, etc.
So we are micro-dosing volatility.
I'm just trying to come up with the the tagline for the show. That's what I do.
That'll get some downloads, maybe from sectors we don't normally explore here on the show. So
you'll get a lot of attention with that. Just hashtag microdosing, and we're going to get a whole new audience.
That's the title of the show. Hashtag microdosing. All right, out to the Southern volatility mecca known as Austin. Mr. Meatball, are you too microdosing some volatility these days?
I mean, volatility itself is microdosing because it's so micro. Just the effect that these covered call funds are having on the S&P 500 and the Qs, are palpable at this point. Going into at the end of the day, I could have bought an S&P straddle at the money for about $114, expiring next Friday, the 31st. So let's do some math here. I would have gotten CPI from this morning. I would have gotten Apple, Amazon, Microsoft, Meta, and Google. I would have gotten the Federal Reserve, and I would have gotten a whole week to look at whether there was going to be the government shutdown was going to end.
And a sprinkling of Tesla too.
And yeah, sprinkling of Tesla too. Other earnings, lots of earnings, right? You have Chevron and ExxonMobil on Friday. And they were charging me, 1.8% of 1.8% of the S&P 500 for a full 6-day look. Absolutely ridiculous. This morning, with us now currently up 65, that spread's already up to $130. Easiest money out there. It is consistently so underpriced. And the funny thing is, S&P is now completely, it's almost like two products. Because the long-dated stuff that they're hedging is still really expensive. 30 days out, options are way overpriced. 5 days in, they're ridiculously cheap. It's like the world's easiest time spread. And Russell, Scott, tell me if you think I'm telling tales outside of school. But that is what I'm seeing.
No, you're absolutely correct. And in fact, I've started doing a few more. I've been able to go back to the floor at SIBO. Not that I was banned or anything, but I've been doing some media stuff for them, which means I get to walk around and talk to the guys. And when they first launched daily SPX options, the market making firms were basically running them like they were two completely different products and different books. And I just, say, you guys, have you figured out a way to integrate it, et cetera? And basically, no, they're continuing, years into this, they're continuing to do it that way. And they should, because they behave so differently. And it's much like I'm working on in Scott's area. I'm getting ready to give you a softball here, Scott, because I'm going to say something about behavior. But the behavior of traders focusing on a day or two is very different than the behavior of traders focusing on, even a week or two out. And I think I think treating them as almost two different products comes down to the behavioral aspects around the short-termism of the zero-DTE and what you're trying to accomplish when you use longer dated options.
I would agree that they're essentially two different products now. And when we were in the pit, we were trying to hedge. We had this neat little graphic we would use to figure out if one option was a good hedge against another one. And differences in strike prices mattered and differences in expiration mattered. And I'm not certain how you could hedge a 30-day option with a one-day option. So you're right, they are different. I'm not certain that the move to zero DTE options in the S&P is a great thing for the market. It just doesn't seem to really be used for. And I always point out that the benefit of options, generally, at least longer dated options, is not that you get more or less. It's not leverage. It's that you can create absolutely unique payoff profiles that you can't get if all you're doing is the 45-degree line of being long or short stock. And these unique payoff profiles are usually superior to just owning or shorting the stock. And that's very different. You can't do that with zero DTE options. So I don't want to be, hey, kids, get off my lawn, but I do worry a little bit about zero DTE and how it's being used. One thing, you mentioned behavior. I do think that retail traders who are using zero DTE options are probably thinking that the unlikely is impossible. We know that's dangerous. And so I think they should be careful. But to the degree that zero DTE is taking over, again, that's a very, very, very different trade. That's not a vol trade. It's not really a Vega trade. It's just, I think it's going to go up, so let me buy a bunch of calls.
Yeah, it's all gamma. What's your take? Scott. By the way, lucky me, twice in a week. I don't know what I did right, but go me. What's your take on these zero DTE funds that are like QQQI, SPYI, where they own SPY and then are selling a 1% out of the money or 2% out of the money call every single day in the Qs using NDX and SPX. There's also one in the Russell 2000. Do you have I think those are having a palpable effect on volatility or on the cost of these options. What's your take on them? Do you think it's a good vehicle for your average investor?
Well, earlier in the show, you mentioned the fact that so many overlay strategies exist now in the ETF world that they are pressing vol lower. I think all of that supply also mutes realized volatility. So there is still a volatility risk premium. That is, option prices are still higher than the ultimate worth of that option, generally over time. But some of these just seem like trading vehicles, and they're great for the sponsor. They seem too cute by half for the users, and so I'm not a big fan of those sorts of things, although I understand the marketing message can be pretty attractive.
Well, along those lines, really quick, Scott, I think it was actually your fault last week. We were talking on the show. I think it was your tweet that brought it to our attention, so I guess I should give you a chance to weigh in on it. We were talking last week about this new rash of products coming out, 3X and 5X products from Volatility shares, 3X and 5X, Bitcoin, Cardano, SOL, all kinds of stuff, and a 3X levered VIX ETP. So I guess if you don't like the 1.5 to 2X flavors now or the inverse, then Vol Shares has you covered at 3X. I know you're not a fan of these products. What are your thoughts on this latest rash of announcements? And do you think they'll get the green stamp Mr. Scott?
Yeah, those really seem dangerous to me. And I've actually had a little bit of a Twitter back and forth with Hester Pierce, who is one of the SEC commissioners.
The crypto mom.
Yeah. She's an advocate for crypto in the SEC, and I've had a chance to sit down with her in her office and watch her. My point is that the SEC tends to approve goofy stuff like that, and it's recently allowing some of these ETF products to talk about these just outrageous yields that aren't really yields, but they're able to advertise because of the way the SEC has written those regulations. So some of this goofy stuff, and I think ads that are inaccurate, let's call them inaccurate in my point of view, get approved by the SEC, but something very logical, like volatility derivatives that use SPY options, are prohibited. And so I don't understand what the SEC is doing. I've said publicly, the SEC needs 50% fewer lawyers and 1,000% more financial practitioners. And then everybody would be better off. The exchanges would be better off, investors would be better off, and the SEC would do a better job of actually serving the needs of the country.
I think all the commissioners are going to be out of jobs. I think they're all pretty much lawyers across the board. So, yes, Hester has been on the network in the past. It's been a while since you've chatted with her. She mostly comes on in her guise as the kind of crypto advocate over there at the SEC. We'll have to go dig up her most recent appearance on the network and bump it up for you folks. It's been a few years, but interesting stuff out there. Let's see if there's some interesting stuff afoot on the vol surface, shall we, listeners? And a spoiler alert, it's all down, in case you couldn't figure that out. October obviously rolling off the board since the last time we chatted. We saw a few of you out there earlier in the week rolling the bones on a few last-minute OCK plays. I think there were some OCK 18 puts that went to die out there and a few others out there. But OCK off the board this week. I think would VRO go out somewhere around 1870. So again, anything on that 18 strike and below, if you were playing the fade game, not exactly coming to fruition. Nove taking the pole position right now, down a little over 3 points as of the start of this segment, about 3.1 points, and the Dees future down about almost 2.25, about 2.2 points from where it was this time last week. Mr. Meatball, sir, we'll go the other way. We'll start with you this time. We've been kind of lamenting for a while what's been going on out here in this vol surface. What is catching your eye this week?
Yeah, I mean, VIX collapsed. We had an October expiration on Wednesday that basically, freed up, I think, the ability of the VIX to start falling. Maybe some of the paper there was kind of holding things up. If you look at futures term structure now, we're back in a contango. That is usually that when we're in a contango, that's the market telling you, hey, kind of all clear. What I would comment on is that now Nove expires on the 19th, I believe, or the 17th, excuse me. So it's got a little less than a month, and the spread between that November future and the cash is over 2 points. That's a little bit wide. Now you're going to say, Mark, when we come back in on Monday and the weekend adjustment is there, that'll tighten up. It might not. And when we see those big, wide margins, my inclination is usually that the guys trading the futures are right and the VIX itself is wrong. So we might have a little bit of a VIX overreaction here in terms of how soft it's gotten and how quickly it has.
Yeah, we've been seeing this for a while. We saw it with the October future versus the cash for a while, and November was kind of slotting in there as well. We were speculating because of the weird date of the October Fed meeting, which is kind of why October and November were kind of wonky. But you're right, we are still kind of seeing a pretty sizable discrepancy, almost 2 points there between the cash and the no future, at least when we ran these numbers right before the start of the segment. Mr. Rhoads, what are your thoughts out there? And are you also having your eyes drawn to the front portion of the curve, sir?
Oh, absolutely. It had been, not looking like we were going into the end of the year, and it's starting to look a bit more like we're going into the end of the year, although it's kind of a smooth curve. But December's at over $1.20 discount to January right now. I feel like that's a bit mispriced. We are going to have a final Fed meeting after the December expiration. And then also it may be Fed Chair Powell's last meeting, which I don't know how much. Yeah, I think it's very telegraphed. But there could be some tension or some expectations of extra volatility entering into the market for the first couple of weeks in December in a way that we're not used to. So that December contract, I think if you're worried about a volatility spike right now, I would, normally one of the trades that I suggest is buying the front month and selling the second month. If you're thinking we're going to get a volatility spike, I actually would give some consideration to sell in January and buy in December right now. You wouldn't get quite the bang for your buck if we get an inversion of the if we get an inversion of the curve. But I feel like you would benefit from it, and then right now, December's given you a nice opportunity relative to January. I do feel like when December becomes the front month, it's gonna see some buying versus some selling because of that final Powell FOMC meeting. So that's where I'm at with respect to the curve. It's looking very normal. I severely doubt that I have ever been on here in the middle of October and the curve looked normal.
You do love that structure of the short.
I do. I'm a term structure
kind of the reverse calendar, which for most names doesn't make a lot of sense, and the brokers don't like it. It's not very margin friendly, but in the VIX construct, it can make a little bit more sense. I think we'll come back to December in a little bit on the VIX options front as well. That late Fed meeting may resonate with a current flash poll we have going right now. But before we get there, let's go out to Scott. You get the final word, sir, on the vol surface this week. Is your eye also drawn to that kind of chasm between the cash and the front future? And also, what else is catching your eye out there, sir?
Oh, it has to be. Yeah, it has to be. It's interesting today, and I know that we call Russell Dr. Vix. I'm going to call him Professor Dr. Mr. Vix to make certain I cover all the bases. But, for example, today we're noticing that, and this is why we say that you can't trust VIX to tell you what's really going on. Calls, out-of-the-money calls in the S&P are through the roof today, while everything else is getting killed. And I think that's important. It tells you that people are not just buying stocks today, but they're buying calls, and they want to continue to buy calls, and they expect a little bit more upside. So that has always been one of the beefs that we have with VIX, is that it mushes everything together. We think you have to deconstruct skew to understand what's really going on.
Scott picking beefs with everybody in the vol space, including potentially the Flowmaster. Maybe an upcoming vol death match coming to the Pro sometime in the near future. Should be a fun one. As we keep on rolling out to the land of VIX options, if you were hoping for a continuation today of the kind of banger VIX numbers we've been seeing out there, which the ADV reflecting that, the ADV up to 860,000 contracts, up 106,000 a day from this time last week, so back to threatening 900K, which is a pretty hefty amount for VIX, then you're not getting it today. Only 275 on the tape. But before we get to breaking down all that fun, and before we unleash Russell for his weekly rundown, let's break down what's open for size right now in VIX land, shall we, listeners? Cost you 191,000 contracts to break into the top 10, which, given that we're just rolling out of the October expiration, is actually a decent amount. That gets us to the NOV 30s. So kicking things off with the bang, NOV 30s. Number 9, 208,000 of the D's 24s. By the way, we're hanging out in our proprietary indicator, 8-2 calls over put. So a second put managing to sneak its way into the top 10 this week. Number 9, 208,000 of the D's 24s. Number 8, right back to the fun, 216,000 of the Jan 60s, 6-0s. Number 7, our first of 2 puts in our top 10 this week, 237,000 of the NOV 16 puts. Number 6, 239 of the NOV 25s. Dare I say it, one of the more reasonable positions on this board, along with the D's 24s, I suppose. Number 5, 242,000 of the Feb 47 halves. That strike We saw some more action on that out to April this week. So whoever loves that 47.5 strike continues to keep the party going all the way out to April. Number 4, 269 of the Nove 15 puts. Once again, what is this? Someone was tweeting to me the other day about the Nove 14 puts. Not even in the monthlies. I think expiring early. They were loving those. I had to tell them, I think that might be a bit of a bridge too far, considering the 15s have never paid in almost the entirety of this year. And we've seen a metric ton of premium go to die on the 15 strike. So, hey, who am I to fight the vol fade? Maybe those 14s will pay off, but we'll see. The 15s, 269,000 of those bad boys open right now. Number 3, 276,000 of our old pal, the No 47.5. Number 2, 291,000 of the D60s. So if you thought those Jan 60s were a little bit too far out for your taste, number 2, the D60s, and the number 1 big dog in the in the VIX landscape this week, 300,000 pretty much exactly of the Nove 35. So some interesting strikes, some head scratchers as usual. Maybe not as many puts in the top 10 as you might expect. Maybe we just blew through too many strikes to give them enough time. But you know what? Speaking of time, listeners, it is now time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, your theme has been played. It's contractually agreed upon 2 times. What is catching your eye, sir?
I just, on the theme music, I just want Mark Sebastian to know that a common acquaintance of us, Dr. Larissa from IIT, now she's at Purdue, she was doubled over laughing on the floor at that music.
I got my money's worth with that theme. I told my guy I wanted it to be ridiculous, and he delivered.
She was over here when I was prepping, and I go, "You haven't ever heard this, have you?" And oh boy! All right. There are some silly. The music is appropriate, is what I thought. Monday, oh my God, the silliness on Monday, and you guys are gonna love this. VIX at 1952. We have a buyer of 100 of the October 29th. 75 puts.
Oh, back to that side of the fence.
Nobody can see the camera, but Mark Sebastian just spit his tea out. For 55.35, got a break even of 1965, so they got a little 13-cent cushion in there. A little bit later, somebody bought with the VIX at 1935, 150 of the October 29th, 100 puts for 80.50. And they've got a break even of 1950. Got a nice 15-cent break even on there.
You need to do a paper on the resurgence of this.
I'm going to, because there's more.
Oh, there's more. Okay.
Oh, it gets better. Again, at VIX at 1935, I think these people actually did a stupid.
I think Mark's going to
fall
fall
out
out of his chair, by the way.
back to back, but it's not a spread. They bought 190 of the VIX October 29th. 95 puts for 75.
All right, these people have been listening to the show now, clearly.
I think somebody's listening here because we're going to talk about the Dees trade that started this all in a minute. Because they were trading it while we were on the program. I think they did it while we were on the program.
Yeah, they were closing it on the show last week. Yeah.
No, they didn't close it.
Oh, they added?
Let's finish with the weekend.
Okay, I don't want to get ahead of ourselves.
Tuesday, VIX at 1850, had somebody buy 4,000 of the November 12th, 55 calls for 15 cents. Kind of like that for maybe a spike trade. If we got up to 40, I think that option would have some value. On Tuesday, with VIX at 1763, somebody bought, and I liked this trade, 100 of the November 12th, 19 puts. They paid $1.48 for it. Their break even 17.52. The break even was a little bit lower, but you had to figure that we would have some drift at some point where they might be able to take profits on that. On Wednesday, this one here, if you guys laughed at the large strikes, wait till you hear this one. On Wednesday, in a couple of different blocks, but I'm going to assume it was the same person, with VIX at 1917, and then a little later when it was at 1874, someone bought 1,000 of the VIX October 29th, 19 puts for 2 cents.
Oh, those look pretty good.
If VIX were hovering around 20, I'd be like, why don't you give me the 2 cents? This ain't looking too bad for the moment.
No,
I don't know what the bid side is on them. I haven't really checked. Thirsty, and I know I'm taking too much of my allotted time here. Thirsty. Also, VIX at 1785. Had somebody buy 400 of the November 26th 20 calls. We're out to Thanksgiving now for $1.75. They sold 400 of the 25 calls for $1.04. That's a cost of 71 cents. I don't like that trade because if we get a move in VIX where you would want to monetize this, it would probably be to the mid 20s. And that means those 25 calls would basically have a good portion of time value. I would want to go farther out with where the VIX spikes have been going to. I would probably have wanted to sell the 30s for about 25 or 30 cents, just because I feel like monetizing it might be a bit difficult if you get a spike up to the mid 20s. The 20 calls going to not have nearly as much time value as the 25s. And I just don't think it'll work out as nicely as it looks on those rigid payoff diagrams that we use for vertical spreads. And then today, with VIX at 1629, somebody following our favorite trade, or my favorite trade, bought 1,400 of the October 29th 17 puts, paid 60 cents for them. Their break even on those is 1640. The big VIX trade, I saw volume when I was talking last week. And what we're talking about here is a trade that I brought up during this segment back in July, where somebody had bought just over 150 of the December 200 puts. They paid about 174 for them. On Friday, I saw volume while I was talking. Somebody bought 77 of those puts for 177.10. When this original trade occurred, they had sold the 20 puts against it. I don't see selling the 20 puts against it this time.
Just straight up.
But what's interesting is there was a buyer of 77, but the open interest only jumped by 47. So a little perplexed there. But they added to it, and I think the bid side on it's like in the 179 range or something now. So they're doing particularly well on buying these, but. And I'm just hoping that maybe somebody lent them 90% of the capital at 0% or something, because it's a terrible use of capital.
Yeah. No matter what they have against this, the capital efficiency on these trades merits a zero. I didn't realize it was all the way back in July we started talking about these, man.
Yeah, I had to look up like the present. I put together a small presentation on it so that I have the prices, and the date on that was July 22nd.
It does seem like someone did a little quiet research paper behind the scenes and decided that this was the way to go with these deep in the money VIX, because all of a sudden we're seeing more and more of them out there. So maybe success and or disastrous failure begets more success. Either way, I don't know what's going on out there, listeners. What is your speculation as to why folks, I mean, regardless of what you think they have against this, the amount of capital they're tying up makes absolutely zero sense, but that's why it's fun to talk about. Is it fun to talk about VIX options today? Yeah, not really. Only 275,000 contracts on the tape, so not exactly a banger day out there. The hot dog out there, such as it is today. Again, going back to what Russell was saying earlier and what we've talked about on this show for a little bit, normally DTE is one of the more reliable fades on the vol docket every year. August and December, usually the two. This year, August wasn't so great, and maybe December with all this Fed kerfuffle going on won't be either. Either way, number one today, 40,000 of the DTE 18 puts. Average price for these $1.51. So they're not giving these away. Now you're getting some duration, obviously, but that's a bit of a spicy meatball for the DTE 18 puts. You like those, listeners? Is that going to be the normal vol fade, or is all this Fed nonsense going to keep vol inflated through expiration? In which case, that's $1.50 going to die. Number two, 20,000 of the Nov 30s. By the way, there is OI on that D strike, so maybe they are closing. Number three, 13,000 of the only opening trade in the top five today. We got 13,000 of the Nov 18 halves, and we won't even bother with the rest. It's so light. Yesterday, a little bit more paper on the tape, but still not explosive. 608,000 contracts. The hot option out there yesterday, and kind of, again, getting back to December. A lot of people are fixing their crosshairs on December right now. The hot option yesterday in VIX was the DTE 16 puts, going up 53,000 times. Average price for these, 45 cents. I was kind of mulling over those as well earlier, because I've been saying for a while my open disdain for the 15 strike and 15 puts. We've seen so much money go to die, and there is OI on the D's 15 puts as well. Maybe 16 puts, a little bit of a better shot. Again, if you believe that cyclical vol fade is going to kick in December again this year. 41,000 had gone up yesterday when we posted this for 45 cents. We thought it was one of those interesting ones. We wanted to get your thoughts on it. That is still live. That'll be probably going away right after the show closes today. So if you listen on the podcast, probably want to have a chance to play along, which is why you should be following us at Options so you can play along on all of our flash polls and questions of the week. Right now, coming into the start of the show, 58.8% of you wanted to buy those puts for 45 cents. 41.2% say sold to you. I could see it's been hovering around 50-50 ever since we posted it. I could see why. This is kind of a bit of an interesting one. It's certainly tempting, but I could also see a little bit of hesitation on that one as well for all the reasons we put down on the show in the past. Number 2, 31,000 of the Nove 25s yesterday. Number 3, 29,000 of the Nove 17 puts. 60 cents for those bad boys, if you're wondering. Number 4, 25,000 of the Jan 19 puts, all the way out to Jan for a meaty put. Those are $1.88. So that's certainly interesting. Would you rather buy the D's 18 puts for $1.51 or the Jan 19 puts for $1.88? Again, that kind of goes back to what we were talking about with the term structure there a little bit as well. Number 5, 25,000 of the D's 19 puts for $2.05. All kinds of meaty puts going up this week. Out to Wednesday, one of the meatier days on the docket this week, 862,000 contracts on the tape. The hot option looks like, again, this is what I was talking about earlier, this 47.5. Whoever has this fixation on the 47.5 strikes, they've been doing it for a long time, for over a year, I think now. They have size open on Nove. They recently opened in February, and it seems like on Wednesday, they put up, might have been a roll of 120,000, which, again, a weird time to roll your Feb 47 halves, but we've seen weirder things. They went up 120,000 times of this Feb April. So now April 47 halves, 120,000 of those bad boys were opening. So if you're playing the home game, put April on your docket for the months where folks just can't get enough 47 halves. And then we dropped to number 3, 38,000 of the Jan 17 puts. Number 4, 30,000 as well of the Feb 23s. Man, all over the place on Wednesday. And then number 5, 30,000 as well of the Feb 23 April 23 calls. So maybe that's a bit of a ratio that they're rolling there. I know in the past they've done some ratios with these. Tuesday, 1.13 million contracts. So that was not actually our banger day of the week. That was Monday. So a million contracts plus on Tuesday. The hot option, 67,000. Again, heading into settlement. So it makes sense why Tuesday would be hot. 67,000 of the OC 19 puts. You might say those went out a winner. Yeah, they went out about 30 cents, but the average price for these was 94 cents. So unfortunately not a winner, but it looks like a lot of these could have been sold and there could be some OI. So in that case, if they bailed on them for 94 cents, and they're looking pretty good. Number 2, 61,000 of the 18 puts. This is what I was talking about. Average price for these, 28 cents. Unfortunately, if they bought these, not exactly a winner there. Number 3, 45,000 of the Nove 16 puts, 26 cents for those bad boys. Number 4, 40K of the OC 15 halves. We were talking about these for a little while. That seemed to be the way some people were playing it instead of the 15s, 15 halves. Unfortunately, no joy for those either. Those are only a penny, though. And then number 5, 39,000 of the 17 puts for October. A whopping 3 cents. Again, no joy for those. Monday, the big dog, 1.29 million contracts on the tape. So a pretty hot start to the week. 109,000 of the OC 18 puts was your big dog. Again, 17 cents for those. That strike was capturing a lot of imagination early in the week heading into settlement, and unfortunately, none of it paying off unless they bailed on them, in which case, looking all right. Number 2, 56,000 of the OC 19 puts. Those were up 56 cents, so again, not exactly a winner. Number 3, 51,000 of the D's 80s. Now we're getting to the fun. 22 cents for those, if you're wondering, opening on those bad boys. Number 4, 42,000 of the Nove 80s. So maybe we got some 80 call rolls going on here. And then number 5, 39,000 of the October 20s. 31 cents for those bad boys. Again, no joy for those. So a lot of wild paper going up on the tape this week. Mr. Meatball, I guess we'll start with you because you got your eye glued to the VIX tape these days. What are your thoughts in particular about some of these D's puts we're seeing going up? Like the one we're debating right now, these D16 puts, about 45 cents. A lot of size going up for those. We've also seen some other D's 18 puts going up today for about $1.50. Are you a fan of that vol fade going into that time of the year, sir?
I mean, it makes some sense if you think if you think we're going to get a nice little vol drop after the December Fed meeting, and that front end of December is actually, like, a lot of people think that VIX bottoms and VIX futures bottom, the week of Christmas, or that week between the two. The really that period kind of leading up to it, around the 10th through the 15th, is a period where options really get kind of taken to the woodshed. So it makes some sense to me.
Yeah, historically, that's the time you want to load up on that kind of stuff. Again, Russell's been pointing out for a while the Fed nuances going on this December maybe make it a little bit different. Scott, anything catch your eye in the kind of tsunami of VIX paper we have going up this week? Obviously, with the exception of today, a little bit lighter today, sir.
I think actually the increase in volume, getting over 1 million contracts on a single day, is a big story, because it looked for a while like VIX volume was going to tail off and stay low. But I think this is actually really healthy for the market. You have to assume that much of this is being driven by hedging. And so if we do get some unfortunate news, could very well be geopolitical, and market is under pressure, everybody is not out at the end of the limb. We're going to have some people who are hedged. And while you have to monetize those quickly, it's better to buy protection when you need it, buy protection when you can, rather than when you need it.
That is certainly the case as we keep on rolling out to the land of the vol ecosystem. What are the vol ETPs and ETFs you like slinging out there, listeners? Are you excited for this 3x VIX ETP we potentially have come into pass out there today, listeners? We shall find out as we find out what is going on out there in the landscape right now. And the answer is a lot of downside, unless you're talking SVIX, which is popping hard, up nearly 3 points right now. SVIX up 2.9 points from where it was this past week, trading right around 20.5, pretty close to it. Only putting up 3,500 contracts, so once again, it can't seem to get out of its own way from a volume perspective, even though the ADV is still hovering around 5,000. So maybe it can hit that today, but it needs to be doing a lot more than that to really be a viable options product. That said, if you want to get in and around some near overwrites and some other things in SVIX, I haven't had too many problems of late. I was surprised in my fill I got yesterday, for example. So once in a while, they do surprise you. But for the most part, though, those volume numbers still kind of anemic. UVIX 940 right now, down nearly 4 points, about 3.8 points from where it was this time last week. Putting up 30,000 contracts. Doesn't sound like a lot. It's not a ton, but the ADV is only 43,000. That's up about 1,000 from this time last week. So UVIX can do some volume when it wants to. Speaking of volume, UVXY, usually the volume king out here on the levered side, 1015 right now, down about exactly 3 points from where it was this time last week. Putting up nearly 100,000 contracts already, 99,000 contracts on the tape. The ADV is 133,000 contracts, up 7,000 contracts from this time last week. So still a lot of you coming to play in UVXY, even if I don't think it's the favorite of any of us here on the show. And then last but not least, maybe you're beloved, maybe you hate it, VXX, giving up the ghost this week. A 33, down about almost 6 handles, 5.7 handles from where it was this time last week. So that's quite a precipitous drop. Putting up 42,000 contracts today, which is down about, actually exactly in line with its ADV, which is about 42,000 as well, down about 2,000 from last week. So wild stuff out here in VXX land, and wild stuff pretty much across the board here. Mr. Rhoads, we'll start with you, sir. What vol ETPs are catching your eye out here? I'm assuming you're watching a little bit of SVIX, and are you rolling the bones on your weekly UVIX weekend tilt, sir?
I am rolling the bones on my UVIX trade, but I'm doing it the way you're supposed to do it. I'm going to do it on the close because that's how I tested it. And I'm really happy to see SVIX whack-a-moling above 20 again, making me kind of happy there. I didn't sell any calls against mine this week. Generally am not as aggressive selling calls when we're in a decent contango. And I just, so that was kind of the mentality about that this week. Plus, I've just been lazy this week. But yeah, the UVIX thing, I just, I like to have that as as kind of a kicker for the weekend. And it, and I have found when you combine that with a long-term position in SVIX, they kind of balance each other out over time. So yeah, I will continue to do that until it doesn't work for about 6 months, and then I'll quit, and then it'll work.
A little bit cheaper to do this week than it was last week, sir. So
it's constantly cheaper. Well, here's the funny thing is the way that I do it, it's a balance with how much SVIX I own. So as SVIX goes up and UVIX goes down, I actually would do more shares.
Oh, there you go.
Yeah. So learn something new every day, don't you?
Every day. Mr. Meatball, same question for you. What's catching your eye out there in SVIX and the rest of the vol ETP landscape, sir?
Yeah, they're, SVIX kind of took it on the chin on the over the last weeks, but it's recovered pretty quickly. And with that spread between those futures and the VIX itself, if the VIX ends up being right, SVIX it would be primed for a pretty strong run here. Now, if the futures are right, it could be a rough week for it. But it's in covered call territory. If you own SVIX now, this is a good spot to start to sell some calls.
Definitely not a bad spot. I've been fading levels above this for a while, and this is not a bad spot, especially after the move we've had. If you're riding some SVIX, we'll talk about this in oddities in a little bit. Scott, the last word is yours, sir, on the vol ETP landscape. We talked about the ones you don't like at the top of the show. Any of these catching your eye and any interesting developments going on there, sir?
Well, I don't like UVIX. It's just so difficult to make money with that. You have to trade it tactically. But at 913 right now, if you were to buy a little bit of that, and again, buy it when you can, not when you have to. That's okay. That's fine. And sometimes as a trader, you have to make the smart trade and it loses money. And right now, I think the smart trade is long volatility. And so you may end up losing money if we go sideways for the next 30 days or vol continues to drop, but your job as a trader to always make the smart trade.
Well, let's see if any of us made any smart trades this week, listeners, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, as we're coming into the end of the show, most markets hanging out pretty close to where they were at the start of the show. S&P up still about 1%, Dow up a little more, about 1.15%, NASDAQ up about 1.35%, and VIX cash vacillating in around the 1635 range, actually 1638 right now. I'll have to go look and see, but I don't recall any 16 handles on the show last week. No, we were all playing firmly in the 20 handles this week, so no joy for us at all, listeners. Kind of an ouchie this week. I will just mark it here at 1638, which doesn't really matter. None of us were close. Let's look. I guess technically Russell was the closest at 2204. I should say Gretchen. Gretchen was the closest. I was second closest at 2337. Pretty perilously close to Mark's palindromic nonsense there. And then Sebastian coming in at 2661 actual. Actually, should have been 2662, Mr. Meatball. What are you doing?
Oh my gosh.
That's what caused this uproar. That's what broke the system. Your palindromic nonsense was incorrect.
I'm sure I said 2662.
Someone check the tape, listeners. It's not like all of this is recorded, so we could tell at a later who screwed up. Was it us or was it Mr. Meatball? You know what? Because I may have besmirched you unfairly, you get to go first, Mr. Meatball. What are you feeling for this time next week?
We've got a lot on the docket next week. Earnings. Well, I said at the top of the show, earnings, the Fed. Are they going to wrap up? Are they going to wrap up the government shutdown? All goes in line. We could see VIX get absolutely pounded. All right, I'm going to do it. 1441.
Oh, there we go. You're feeling the. That's not just a fade. That's a smoking. That's old Yeller style. Mr. Scott, you weren't on the show last week, so you didn't get a chance to fail like the rest of us. So you get to go next, sir. What are you feeling? Are you feeling Mark's fade? Are you feeling a turnaround in vol? Something in between, sir?
No, I think that what we see today is that even bad news on the inflation front is good for the market if it's a tick better than expectations. Now, you'll have to explain to me, maybe we can turn to Professor Dr. Mr. Russell to explain to me why the Federal Reserve is going to cut rates in a couple days when inflation is at 3% and joblessness, the unemployment rate, is at about 4.5%.
These are the mysteries I've been trying to solve for some time, Mr. Scott. So, alas, I have no answers for you.
So, to make the rich get richer. There's your answer.
Oh,
okay.
Yeah. Uh-oh. Class warfare on vol views this week. Before we go down the rabbit hole, Mr. Scott, what are you feeling for vol next week? You can throw a volley in there if you want to.
Yeah, I think we're going to continue to, volatility is going to continue to sell off a little bit. Certainly get hammered on Monday when we get, or it might come back a little bit on Monday when we get past the weekend. But this time next week, VIX is at 1550. Volley is at 1250. And importantly, taildex measure of the cost of crash protection is also going to be lower. TDEX is at 1546 right now, and it will be below 15 this time next week.
Below 15. There we go. All right, listeners, you got a plethora of things to go. I'll tell you what, I will go next to buy Russell, a.k.a. Gretchen, even more time out there. And I'm going to feel the opposite of what everyone's feeling, but not a crazy ton. In fact, it's not that higher, much higher from where we are right now. I'm going to feel a little bit more upside. I'm going to say 1683, so we managed to conspire our way a little bit higher this time next week, but nothing crazy. That means Mr. Rhoads / Gretchen, you get the final word, sir. What are you feeling for vol next week?
I was trying to write a TDEX model real quick and couldn't get it done, but I have Gretchen in all of her wisdom has written a model for volley, and we're looking at 13.297842. So I will say 1330. And the prediction for VIX is 16 and doubles 1655.
I will keep all of your decimal points for volley. We will test you down to the millionth decimal place. So there you go, listeners. There's your range out there for this week. I'm just looking at our chat here, and we got all kinds of numbers coming in out here. So get your prognostication in if you have not yet, listeners. If you're listening after the fact, add options on your favorite social media platform. Questions at theoptionsinsider.com also works. And then you too can win fabulous prizes. All right, that's going to do it for us on Vol Views this week. Looking at our chat here, Scott, as our guest, well done. I see your opponent, our pro member, is lurking in our chat for this week on the fantasy football front. I do believe he said he's read all of your books and is a big fan, but has no problem beating you this week in fantasy football. So they're talking a little smack. He's already saying he's putting his team through two-a-days, and he's getting the champagne on ice to celebrate his victory next week. So what do you have to say to that, Mr. Scott? You can speak directly to your opponent. And then B, you got a little cool new service in the offing. If folks want to check it out, where should they go? What should they do?
Well, the first thing I'd say is it's a market, and so he may very well win. I think that it looks like I have the edge right now. So I'm feeling pretty confident that I'm going to end up going 6-2. But, I mean, it's a market. Good luck. And, yes, we have started a new subscription service at nationsindexes.com. Thank you, Mark, for bringing that up. And there, all of our index values, so vol dex, call dex, put dex, tail dex, risk dex, they all measure important elements in the option world on the most important underlyings. So the S&P, the NASDAQ, the Russell, and a bunch of interesting fixed income, precious metals, and individual names. Our indexes are available in real time to subscribers there. And the goal is to help you trade with data rather than a hunch, so that you can really see what the market is doing rather than relying on a single number like VIX.
There you go, listeners. So if you're wondering where we get all these numbers we're throwing out all the time, like volley and tailed X and everything else, check it out for yourselves. Nationsindexes.com, the place to go to kick the tires and light the fires. So yeah, like Scott said, if you're looking for some interesting stuff outside of VIX, we talk a lot of VIX on this show, but there's a lot more to the vol landscape than that. Nationsindexes.com, the place, especially for all of you out there who love your just the facts, ma'am, vol, no skew, or maybe you want pure skew with tailed X. You can separate it out, all kinds of fun. Nationsindexes.com to learn more. I'll be watching Age. I got to root for you this week because you could take out my clear opponent from the number one spot in fantasy. So we shall see how that unfolds. Mr. Meatball, sir, if folks want to see what you have unfolding, including Andrew flashing at various intervals, where should they go? What should they do?
Yeah, we're doing some cool stuff. Andrew's building an AI engine that tracks long-dated calls. It's really cool. So you definitely want to check that out. Just Google search for Option Pit in YouTube and follow me on Twitter at Option Pit.
At Option Pit, the place to go to learn more. And last but not least, Mr. Rhoads, if folks want to pepper you with questions about your inputs for Gretchen, where should they go? What should they do?
You can find me on the Twitter or the X or whatever under my full name. I did another white paper that got published earlier this week about the behavior of one-day NDX index options, which was kind of interesting, breaking down the performance there a bit. The block trading paper, the other screens that we've been doing don't warrant writing them up. So that's why we haven't done much of a follow-up, other than I can tell you that option liquidity doesn't make a big difference if you're following block trades. We thought it would. It doesn't appear that it does. So we're still working with that data, and we're just about done adding 2024 to it as well. So there'll be more to talk about in the future.
There you go. Find them on Twitter /X, 2 S's, 2 L's, RHOADS. If you got all the way to the inebriated Tampa weatherman, you've gone too far. Dial it one back, and you will find Mr. Rhoads. That will do it for Ball Views this week. Not going to do it for the network, though. We'll be back in a few seconds, actually, right after the show. So all you hanging out, including you folks talking smack about fantasy football, I'll see you for the official after party of Vol Views, known as Options Oddities. You want to check that out for yourselves, theoptionsinsider.com/pro. Then we're back again one final time to wrap up everything for the week over there on the Hot Options Report. Then we're back again next week all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.